It's great to have with us David Lau, fund manager at Seilern Investment Management. David, welcome.
Thank you.
David, you have an investment idea that you'd like to share with us today, but before we get into that, I'd love to hear a bit about your background and how you got interested in investing. I know you were doing something else before, so tell us a bit about yourself.
Yeah, my background is I graduated with a medical degree back in 2004. And the interesting part is that for the first 20 years of my life, because I grew up in a small town in Malaysia, my parents never dabbled in stock market. So I don't have any exposure to investment until I was in universities. And unfortunately, the first book that I picked up is on Warren Buffett. It's called Buffettology, written by Mary Buffett. And that really made my interest grow. And over time, interest become, the hobby become it become my obsession, you can say that. So after I graduated with a medical degree, I thought of changing career into investment field. But it took a while because I worked in medical field for 3.5 years, which in a way does help me to understand some of our investment here. And I've been applying jobs and written to Peter, and then eventually one day he called me up to say one of the analysts is going to leave. Would I be interested in joining the firm? And subsequently I joined them in August 2009 and have been here almost 3 years now.
And tell us a bit about your focus here in terms of the companies you look at. Are there any particular sectors that you're focused on?
We are all generalists here. So we don't, just because my background is medicine, I'm not pigeonholed to say just cover pharmaceutical or medtech stock. So we are kind of open-minded. We cover retailers, industrial companies, pharmaceutical companies. So everyone do everything. So that we have we are all generalists, you can say.
However, one of the ideas that you are presenting to us is close to your field of expertise. So can you please share with us the investment case on Novo Nordisk?
Yeah. So as you mentioned, the investment idea I'd like to share with you and the audience today is a company called Novo Nordisk. And basically this is the best biotech company that I have ever come across. And the interesting part about Novo is that it is the global leader in the diabetes market. And in the insulin segment, it has 50% global market shares. And the importance of diabetes and insulin is that 3/4 of Novo's revenue come from diabetes and insulin. So it is quite important that I just have a brief overview to understand a bit about insulin and the history of insulin so that we can appreciate Novo's better. Now, insulin is a hormone that is produced in the body, and patients who suffer from diabetes are basically categorized into two categories. Type 1 diabetic patients, basically they don't produce any more insulin. So we need to give them insulin replacement. And type 2 diabetic patients, on the other hand, what happens is over the years when they are in the 50s or 60s, either the insulin production decrease or the body just becomes less sensitive to insulin. So we have basically two categories of diabetic sort of patients. Now, if we look at the histories of insulin, which is I find really fascinating, we first discovered insulin back in 1920s, and that is also when Novo was founded in 1923. And initially, we manufacture and process animal insulin to be used in human, and we used that for years up to 1987, when through biotech engineering we eventually found a way to manufacture human insulin. And as the name implies, human insulin has the exact same structure as what is produced from our body. So in a way, human insulin has never been patented, okay, because it's a natural producing insulin. But the only problem with that is that when we eat and the insulin is produced in the body, it is excreted directly into the bloodstream, so it has immediate onset of action. But when we administer insulin through injection, we are injecting it into the fatty tissues, and the problem is they tend to clump out together, and there is a delay onset of action. So a diabetic patient who want to have a meal, they need to inject themselves 1.5 hours before meal so that the insulin can work on it. But anyway, they're still better than animal insulin. So we keep using human insulin up to 1999, when we make another breakthrough. So Nobel, that time, they produced so-called modern insulin. What it does is they substitute one of the amino acid in the insulin, basically make it more soluble. So rather than waiting for 1.5 hours before meals to inject yourself, now you just need to you inject yourself just before meal. So that really improved the management of diabetes. And in fact, we are on another wave of breakthrough coming either end of this year or next year, which is so-called ultra long-acting insulin, which can be dosed over 40 hours. And the only company that has that is Novo Nordisk. That should hopefully be on the market by early 2013. Now, if you look at this insulin, they have been producing insulin for the last 89 years, and they have been extremely focused in this field, and they have done extremely well. Now, and with this, then I can basically explain to you the moat. Where does this moat come from? Because as we all know, all these pharma companies, the moat come from patent protection, right? But the problem lies is when the patent expires, and then that's when the sales will plunge, because there's nothing to protect them. But then insulin, compared to other medication, is slightly different. So as I mentioned to you, if you take human insulin as an example, we know how to produce human insulin since 1987. So for the last 25 years, anyone who has the expertise, who have the capital and the distribution, if they want to, they can actually break into this insulin market. But the thing is, the top 3 big players, Novo Nordisk, Eli Lilly and Sanofi, they still have about 95% of the market shares globally. Why is that so? The reason is because when not only is the biotech plant very expensive, it's also because you need to have very huge network of distribution, because insulin need to be distributed in cold chains. So not only you need to have huge volume of production, you need to have the scale to distribute them effectively. And on top of that, most insulin now, they are sold through pre-filled pens. So not only you have to be able to produce insulin in huge quantity, but you need to have the expertise to produce the pens in huge volume also. And fourthly, what is really important is that they must have long-term relationship with the government, with the doctors and the payers. And you can see this Eli Lilly and Novo already have this long-term relationship with the government for the past 89 years. How do you break into that? That's why you are seeing biosimilar company, there's about 40 biosimilar companies in the world, they still only have less than 5% market shares. And actually, the interesting remark by one of the executives of Novo, he actually told one of the competitors who tried to break into insulin market, they actually told him, it is easier to turn around an airline company than try to break into insulin business. And I think that's a really good remark. Now, I justify where the moat's coming from, and the interesting things that I want to mention is why we as a firm find Novo still very interesting, despite making the products for the last 89 years, is that if you look at, according to the International Diabetes Federation, it is estimated that there is about 366 million of diabetic patients last year. And the number of diabetic patients is going to grow from 366 to 552 million in 2013. So we are talking about the prevalence of diabetes increasing at 2.2% CAGR over the next 19 years. Now, that is not the most important part, because if you look at these 366 million of diabetic patients, half of those patients have not been diagnosed yet. So there's only 180 million of diabetes patients being diagnosed. And out of these 180 patients that have been diagnosed, only half receive treatment. Now, and 90 million of these patients who receive treatment, only half of those actually achieve their treatment targets, which leave us with 45 million. Now, out of these 45 million of populations that have been on reach treatment targets, only half of those reach the treatment outcome. That means diabetes that is well controlled and with the desired outcome. So in a way, we are talking about 94% of the population, of the diabetic population, that either have not been diagnosed yet, either not on treatment yet or not on the right amount of treatment. So the fact that we should really kind of find this diabetic, kind of diagnose diabetes and treat them better, plus the compound growth rate due to the prevalence of diabetes is going to drive kind of mid-single digit volume growth, not in the next few years, but in the next 2 decades. Now that's one part of the equation. The second part, which I mentioned just now initially, is I've been talking about we've been using human insulin since 1987. And then from 1999 onwards, we start using modern insulin, which made diabetes control a lot better. Now there is a secular trend to move and migrate patients that use human insulin to modern insulin to control the diabetes better. As I mentioned once to you, that the cost of controlling diabetes is about $200 billion in the US, and the cost of diabetic medication is only 7%. So in order to save and to cut down healthcare spending, we have to use kind of better insulin to control the complication of diabetes. Now, if you add that the secular trend towards using better or so-called the modern insulin, coupled with the fact that we have to diagnose patients better, coupled with the fact that there is a huge secular trend, we are seeing at least double-digit growth rate, not for the next few years, but for at least 1 or 2 decades to come. And that is where we get really excited. Plus, the management has been very positive and are very determined to grow operating profit long-term at 15%. So you can see why we are still very interested of Nobel, despite the share has done really well. Now, I know one of the important questions that you're going to ask me is about the valuation. Obviously, Nobel has done very well in 2010 and has continued to do well this year. And at the current price of about 820 Danish kroner a share, the share is trading at 23 times this year's earning. Now, obviously, you're going to ask me, on average, the large cap pharma company trade at 12 times. So why should this company trade at 23 times earning, right? Now, but if you look at all these big pharma companies, all these companies like Eli Lilly, like Novartis, like Roche, what you notice is that they actually have revenue declined because of huge headwind coming from patent expiration. And other companies like J&J, Bristol Myers Squibb, Glaxo, they either have flat sales or low single-digit earning growth. So that is the reason why all these companies have been trading at about 12 times PE, while Novo trade at 23 times, because the top line of Novo grew at 13%, and the operating profit in the first quarter grew 18%. And as I mentioned to you, this is not a one-year phenomenon. That will be a long-term trend. And the other thing is, if you look at most pharma companies, because of huge kind of headwind that they're facing, they are very aggressive in acquiring companies to plug holes in their losing revenues. And Novo, on the other hand, has been very, very disciplined because they don't acquire any companies. And their guiding principle basically is they will just do R&D, finding good medication, very focused on protein engineering, especially diabetes. And then all the rest of the money will then be kind of returned back to shareholders through dividends and buybacks. Now, if you believe in the management guidance, which we do believe in, if they do grow their earnings by at least 15% a year for the next 5 years, the PE will actually shrink down. On top of the dividend that you receive, you will be equivalent to paying about 9 times earnings in 5 years' time. So you can ask yourself, what should the company be trading at 5 years down the road, where the moat is going to strengthen and the outlook will be good for this company? If you trade at 18 times earning, basically the share double, so you get a 15% return a year for the next 5 years. But if you think the company only should trade at 15 times earning, you still get a compound return of about 11%. So that's the kind of overview why, despite how well Novo has done, we still have high conviction in this stock.
There are several questions that come to mind, and you've laid out the investment case very well with the operations and the moat, and given us a good case for the long-term secular trends there and how Novo can take advantage of that. I'm curious, what are some of the main risks that you see to your investment case without somebody necessarily picking on valuation and saying, well, it shouldn't be at this multiple, it should be at this. Based on your view of Novo, where do you see the biggest risk for your case?
I think the single biggest risk, I think you just mentioned here, and what everyone been pointing is the valuation. Because in order to justify this sort of valuation, they really do need to deliver the earning growth that we expected and the consensus expected. So that is the single biggest risk. Because if you look at the product risk, they have been doing this for the past 90 years. And if you just go back 5 years at a time, what you actually notice is that this company is becoming stronger and stronger in every 5 years period. And the product that is coming out is actually strengthening. And in fact, what I should be telling you is that the growth is actually accelerating, not just from the diabetes because of the time constraint here. I've only picked on the 3/4 of the revenue. But if you look at what they have in the other portfolio like hemophilia market and the growth hormone, right now they are number 2 in the 2 other markets. Over the next 3 to 5 years, they will be the global leader in hemophilia market also. Plus, what they come out and the pipeline that they have is incredibly strong. So I think the single biggest risk for this company is really the valuation. And obviously, if there's any product delay, things like that, it's going to affect the stock price. I'm less concerned because for most pharma companies, my main concern is about acquisition risk because people tend to overpay for stuff. And in Novo's case, again, I said they don't acquire anything. There's really no goodwill on the balance sheet to speak of also. So I think the management has been good. The product pipeline has been very interesting, and the competitive move is actually getting stronger and stronger each year. So the single biggest risk is really about the valuation risk that I can think of, and also delay in kind of product launches. Obviously, if there's any product recall like any other pharma company, then obviously they can hit the stock price pretty hard. But there's nothing that should really impair the company permanently, in my view.
And you touched on this, the importance of the other opportunities. I'm curious to understand this reinvestment opportunity, if you will. It seems that the core business is so well protected in the moat and it just keeps generating huge amounts of free cash flow. How significant are some of these other opportunities, and can you give us a sense of how management views their capital allocation priorities?
The capital allocation for the company, as I said, in the guiding principle, is very simple. First of all, with the money that they earned, the first thing is they will invest back to R&D. Okay, not simply just invest into every sort of R&D, but R&D that makes sense to them, and only focusing on protein engineering. They don't do everything. They just do very small niche of product that is anything related to proteins, and that come back to that actually they generate so much cash that most of the money will be paid out either as dividend or shares buyback. So the payout ratio right now will be at least 50%. Plus, they still have net cash on the balance sheet. So that is the basic principle. They won't acquire anything. They might do joint venture if they need to. But the big opportunity right now is really not just focusing on the insulin side, but also focusing on other market like hemophilia market. Now, they are also doing incredible things in the growth hormone areas. Over time, with their expertise in protein engineering, they're going to apply that into the growth hormone, and hopefully in the long run can be global leaders also. So the opportunity is huge, but as I said, they don't really need so much cash to be reinvested because they are spending enough money on the R&D, but most of them will be returned back to shareholders.
And how big are these markets relative to the, it seems that the core business itself has very attractive growth down the road, so how significant really are these other treatment areas relative to the insulin market?
If you look at the insulin market, just now when I pointed out, we have only been talking about insulin. So if we talk about insulin market globally as a whole as of 2011, the market is about $16 billion. But then we haven't covered the type 2 diabetic market. The type 2 diabetic market is another 20 billion. Right? Now, what I haven't pointed out is that 2 years ago they launched a new product called Victoza, which is a GLP-1 agonist. That is one of the 2 GLP agonists in the market right now. Now, the other company that produced GLP-1 agonists is called Amylin Pharmaceutical. They start producing their product called Byetta 5 years ahead of Nobel. Although they produced it 5 years ahead of Nobel, the sales peaked at about 750 million back in 2008. And since Victoza was launched, the sales has declined to 620 million last year. But Victoza, which was launched only 2 years ago, because, as I mentioned, very important to have scale and distribution and the connection. When the Victoza was launched, it became blockbuster. It crossed 1 billion sales in 2 years. And these sales, this drug alone at the moment, if you look at how much they account for as a whole diabetic market, right now they only account for about 5% of the diabetic market, which the company believes can grow to at least 10%. And I truly believe it can happen, because if you look at the Danish market, where obviously they are from, they're a Danish company, so they should be really strong in Denmark. If you look at the Danish market, Victoza has about 20% market shares in the diabetes market. So really, this drug will really drive further growth for Nobel. And the type 2 diabetic market is about 20 billion in size, so it's a lot bigger than the insulin market. So globally, we are talking about 36 billion market that is growing at least mid to double digit growth rate for a very long time. So in fact, if you really talk, when you look at Nobel and each of their products, a lot of their products is actually driving the growth, not just the insulin. And that makes it really interesting, I think.
Now, when it comes to just understanding the moat itself, it's a very interesting thing that you talked about with the size and the distribution capabilities and the critical, I guess, scale that it takes. So making Novo, in a way, immune to the constant challenges of competitors in terms of innovation, as the Amylin example demonstrates. Do you think that is really at the core of its moat?
Yeah, definitely one of the moat, where, because a lot of people pay a lot of attention on patent. What I try to figure out is what happens when the patent expires. That's why if you look at Novo, it's really important to understand the moat is really about scale and distribution and the long-term relationship. Because as I mentioned, when Amylin launched their product 5 years ahead of Nobel, they have 5 years lead, and the only product in town that has been proven really effective. But the thing is, they never really made any money. They still lose money, and they never made any money since 1987. Now that really tells you that for a company like Novo, because they already have all these sales reps on the floor, they have the relationship with the endocrinologists, it's very easy for them to add another product in, and doesn't have much incremental cost, and they can have very amazing sort of distribution really, really quickly. So that's why you can see in 2 years they can break through the 1 billion barrier very effectively, and being profitable in doing that. So how do you really compete with that? And on top of that, when the patent expires, as I said, what they will do is a competitor who try to match price for price with Novo, they can't make money, and they cannot scale up. So you really need to have kind of long-term relationship and with huge volume and good distribution to make money in this business, because the product that they sell is not expensive.
Now, if Novo, the analogy that comes is kind of like a golden goose that just keeps producing, and I'm wondering if we convince ourselves of that moat and the durability of it, and I'm curious, do the governments pose a risk in terms of grabbing some of that value that's there, or some of the economics in that powerful machine that is Novo. Has that been has anything changed there, perhaps as a result of the crisis in Europe and the government's budgets? Has that been a source of any impact on the business from that?
Yep, I mean, it's good that you pointed out, because like all pharma companies, they do have some headwinds with the pricing, because like, I mean, Europe have all these crises, and then we all know that healthcare costs in the US is really high in comparison to most other developed countries, and everyone really want to reduce the cost. So they do have some small kind of pricing headwinds, but the headwinds is really small, because what they do is they will go to the government and really convince the government that, okay, if you really look at the big picture, if you really want to save, kind of cut down healthcare costs, because the proper way to think about diabetes is that it's not kind of glucose problems on it. The real way of perceiving or thinking about diabetes is a cardiovascular disease which lead to heart attack, stroke, blindness, limb amputation. So the cost of managing that, as I mentioned earlier, is about 200 billion in the US. And the anti-diabetic medication only make up 7% of the cost. And the rest of the cost, 90+%, is really because of the complication. You want to manage the complication, in-hospital treatment. You can imagine there's so much complication going on. So in fact, all these companies, what they try to do is convincing the government to use better products rather than just using human insulin. They should really migrate patients as soon as possible to use modern insulin, which, as you can imagine, should cost a lot higher than the human insulin. So in a way, although they do face some kind of pricing headwinds, but the migration from patient from human to modern insulin actually gives them, in effect, is a pricing power.
When would you sell your shares in Nobel?
Right at the moment, we wouldn't be selling, because as I mentioned to you, if they achieve their target, we're still earning double-digit growth rate over the next 5 years. And I said, one thing that since I work here, that I learned a lot when you discuss with Christian later on, is about understanding kind of like the momentum side, which if you look at Nobel, the momentum is definitely kind of going in the right direction, or Jesse Livermore used to say, the path of least resistance. If you look at Nobel, the path of least resistance is really going up because of the strengthening in the product's pipeline and the growth potential that they have. So in this case, the chances of derating in this company right now is very low, so we wouldn't be selling. So obviously, unless the business model is broken down, or the company is grossly overpriced in terms of their valuation, that is the only time that we will sell, but not right yet.
I guess that's what I was trying to get at. If you could give us a sense of the price at which you price per share, at which you would be reevaluating your case and selling. You mentioned the shares are around
820. Yeah.
Can you give us a sense of where do you think today is the intrinsic value, and to give us a sense of the upside you have in the model and expect?
I think when this company trade at, say, near towards 30 times sort of earning, then I think we will kind of evaluate further. I mean, the thing is, we wouldn't want to say exactly a price target that will sell exactly, because the thing is, we have to kind of evaluate when it does reach the price target, kind of, in this case, when it crossed the 25 times earning, nearing to 30 times, then we'll watch it very closely and to ask ourselves whether what has changed. Why should this company be worth 30 times earning than 23 times right now? So when it does reach a very high multiple, let's say 30 times, then we kind of will be more cautious, I think.